Hello everyone, welcome to the elliottwaveforecast.com YouTube channel. Today is September the 5th. So today's start of the day is the DAX. This is a 60 minutes 1 hour time frame. We can see right here we ended with 1 at 16,528. So now that means we are now doing a wave 2 pullback. Within the wave 2 we have subdivision here as a W, X, and then now doing the Y leg down, so calling it lower. Now of course I think for this view to be confirmed, technically we still need to break below the W again. That will confirm this is the end of the correction and it will not become some other complex correction again, rally higher again. But from here I think this is a very good structure to learn more about corrective structure, right? So we can take a look at a couple of different ways here. Number one, take a look at the decline here. Now this decline is what we call a corrective structure, because in an impulsive structure you will have a 1-2 with extended 3, right? Usually 161.8% extension, usually, not always but usually, and then you got a 4 and a 5. Now in here you got a 3 swing. You got a 3 swing, okay, and you got no extension over there in that 3 swing, right? You got no extension in that 3 swing because the third swing here is not 161.8% extension, but if you measure the extension, it is simply 100% extension or even less. Now in this case it didn't even hit the 100% here, so there is no extension, which suggests less likely that you should be labeling this as a wave 3 of any kind. So you have a 3 swing ended without reaching even 100%, so that is corrective. So if you see a move down that is corrective structure, then basically what this is telling you is that this is not a bearish market. So if when you look at it from this point of view of the decline, then this is actually a bullish market, because if this is a bearish market, you would have gotten something like 1, 2 and then extension 3 to 1.618 and then a 4 and a 5, but you only got 3 swings, and then after that 3 swings is complete, you got this rally over here, right? This rally obviously is not a wave 4 or anything like that, so this cycle ended here. This entire cycle ended here in 3 swing, which is corrective, so it is a bullish market. On the other hand, if you look at the rally from the lows, now you can also see over here, this is also what looks like a 3 swing. Now you might ask, can we call this 1, 2, 3, 4, 5? Technically you could, however the extension suggests that because again, if it is an impulse, you would want to see something like 1, 2, and in an ideal impulse you got a 1.618 in the 3 and then you got a 4 and a 5 like this. That is an ideal impulse. But here you got a 1, 2 and then the third swing is not even reaching 1.618, so the entire move ended here and then you got a pullback here. Now this pullback again is too big right now that you cannot try to label this as a 1, 2, 3, 4, or it's not a good thing to label it as a 1, 2, 3, 4. And the reason is because simple, if you draw some sort of trend line, this bullish channel, bullish trend line, whatever you want to call it, it has already broken below. So what that means is when it breaks the trend line, you can say, well, the cycle finished because it broke below the bullish channel, bullish trend line, right? So then you look at this rally and then you ask yourself, so okay, it already ended, so did it end as a 5 waves or did it end as a 3 waves? Now again, because there is no extension and this entire move in fact starting to finish between the 100% area, so that's why I think it's more likely to be a 3 swings rally as well. So you get a 3 swings pullback telling you it is a bullish market, but the rally is also 3 swings telling you that, well, it's not ready to extend higher to a new high, because again, if the 3 swings pullback here is the end of the correction and the DAX is going to resume to new high again, this would have been doing something like this, 1, 2 and then 3, 4, 5, but it did not, right? It did not do something like that. There is no extension on the third swing. and it was only a 3 swing, and the cycle ended breaking the trend line. So then what can we conclude? We conclude that it is actually a bullish market. However, since the rally is still corrective, we can conclude that it seems like we want to see a bigger pullback first, right? We want to see a bigger pullback. Doesn't mean it is bearish, it's just a pullback within a bullish market. So if I go down, if I upgrade on the daily time frame, okay, let's put down this one here, over here, right? Like we talked about before, this one was only 3 swing, which is bullish market, but the rally was also only 3 swing, which is telling you that it is not ready right now to go higher again. In other words, it is not the end of wave 2 yet, because if it is and it is ready to go higher, this would have been an impulse, but it's also only 3 swing. That's why we expect now a possibility that we can extend lower again like this, and then we are going to be doing what we call a double zigzag or double 3 double correction. And then once we finish this entire move, then we can potentially have a chance to extend higher again. Maybe that's the end of 2, or if it is not the end of 2, so how do you know if the end of 2? Okay, let's assume that we really go down. Then how do we know this is really the end of the correction? You look again at the structure of the rally. Is the rally looking like an impulse, or is the rally a 3 swings rally again? Now if the rally is a 3 swings rally again like this and go down again like this, then that means okay, that means it seems like you can even extend lower again and become even a bigger pullback again. So it can continue to become a bigger pullback like this, like so, before finish, right? So we need to check the structure of the rally later on, but for now, this one was a 3 swing, this one was a 3 swing, this one a 3 swing down, telling us it is not bearish, 3 swings up, telling us it most likely still can see more downside due to a bigger correction. And so now once we break below W, this view is going to be confirmed, and then we can extend lower. Now what if we break X here instead? What if we rally and break X? Now in that case, what we can conclude is that since this one was only 3 swing, no extension, if it breaks above the previous peak, this is calling for another WXY like this. But because this one was not impulsive, as long as we stay below 16,528, right, if it does something like this in the next 3 swings higher like this, 1 2 3, it can fail and go down again because the first leg was not impulsive, right? So that's the idea here, guys. Now if you want to learn more about Elliott Wave or get more updates on the charts, feel free to try our service. We have 14 days trial. The link is in the description of the video. See you all again next time, and have a nice day, everyone.